Ripple just signed one of the most strategically significant banking deals in its history, a 15 million user institution, the exclusive banking partner of South Korea's largest crypto exchange, a signed partnership with Ripple's APAC head. Phase 2, live as of yesterday. XRP is not in the deal, and that is the most important detail in the entire story. Not because it's bad news, but because of precisely what it tells you about where Ripple's pipeline is actually going, and what has to happen before XRP enters every single one of these agreements that are currently being built without it. On April 27, 2026, KBank CEO Choi Woo-hyung signed a strategic partnership with Ripple's Asia-Pacific Managing Director Fiona Murray at KBank's Seoul headquarters. No press conference, no fanfare. Phase 2 of the proof of concept went live the same day, targeting remittance corridors to the UAE and Thailand. KBank is South Korea's leading internet-only lender and the exclusive banking partner for Upbit, the country's largest cryptocurrency exchange. Korean regulations require all crypto exchange users to link a verified bank account before trading, and KBank holds that position with Upbit. That arrangement fueled rapid growth, with KBank's user base jumping from roughly 2 million in 2020 to 15 million by the end of 2025. And this bank, plugged directly into South Korea's entire retail crypto market, just built its cross-border payment infrastructure on Ripple rails. Without XRP, the reason XRP isn't in the deal is that banks running compliance-heavy pilots want predictable settlement value, and XRP is too volatile for the job. A token that could drop 5% during a transaction creates a regulatory headache no bank wants. Stablecoins like RLUSD fix that problem because they hold their value through the transfer. That's why the major Ripple Bank deals in 2026, Deutsche Bank, Convera, Kyobo Life, have all gone the same route. Deutsche Bank, Convera, Kyobo Life Insurance, KBank, all on Ripple rails. None using XRP as the settlement asset. Not yet. So here is the structural question that every XRP holder needs to sit with before we go any deeper. If Ripple is signing institutional partnerships at this pace, banks, insurers, remittance corridors, custody deals, and none of them are requiring XRP as the settlement layer right now, then what exactly is the trigger that flips that? What converts RLUSD settlement into XRP-bridged on-demand liquidity at scale? And more critically, is that trigger a technology decision or a legal one? This is XRP News Flow Signals. We do not cover price candles. We track the documented institutional mechanics, the regulatory architecture, and the pipeline signals that determine where this asset moves before the market prices it in. And the KBank deal, read correctly, is one of the clearest structural signals in months. Not because XRP is in it, but because of what has to happen before it is. Let me show you the full picture. Let's map the Ripple institutional pipeline as it exists today. Because the pattern across these deals is telling a story that the headline-level coverage is not capturing. Ripple's Palisade platform, the wallet-as-a-service product it acquired in November 2025, provides institutional-grade security through multi-party computation, zero-trust architecture, hardware security modules, and pre-built AML and KYC compliance. KBank swapped its in-house wallet for Palisade in Phase 2 of the pilot, which is now evaluating transaction stability, speed, cost efficiency, and data transparency across the UAE and Thailand corridors. Ripple Payments has now processed over $100 billion in volume globally. The platform allows customers to collect, hold, exchange, and pay out in both fiat and stablecoins. Recent APAC activity extends beyond KBank. In April 2026, Ripple also partnered with Kyobo Life Insurance to explore tokenized government bonds through Ripple Custody. So the architecture being deployed right now is Ripple infrastructure, RLUSD settlement, bank-grade compliance, institutional corridors. That is the Phase 1 and Phase 2 model across every deal. What Phase 3 looks like, when Ripple's on-demand liquidity product activates XRP as the bridge asset between Korean won and UAE dirham, is the moment every transaction in that corridor creates real XRP buying and selling pressure. The infrastructure being laid right now is the foundation for that activation. The path to XRP demand from this partnership isn't closed. If KBank eventually turns on Ripple's on-demand liquidity service, where XRP is the bridge between Korean won and dirham or baht, every transaction would create real XRP buying and selling activity. That switch has been the missing piece for XRP in almost every Ripple partnership for years. That last sentence is the most honest summary of Ripple's XRP demand thesis you will find anywhere. The switch has been the missing piece. Not the technology, not the partnerships, the switch. And the switch has a name. It is called regulatory certainty. Which brings us to what happened at a Bitcoin conference this week that most people missed entirely. But that's not even the big story from the last 48 hours. What I'm about to walk you through is what SEC Chair Paul Atkins said publicly at Bitcoin Las Vegas 2026 about instant settlement, T+0, and blockchain infrastructure. And when you hear it alongside the KBank announcement, you will understand why the institutional timeline is compressing faster than most XRP holders realize. SEC Chairman Paul Atkins told attendees at Bitcoin Las Vegas 2026 on Monday that the agency is moving to embrace digital asset innovation, end enforcement-driven regulation, and work alongside the CFTC to bring clarity to U.S. crypto markets. He confirmed that an innovation exemption for on-chain tokenized securities trading is coming within weeks. The blockchain, the distributed ledger technology, is the most exciting aspect about all this, he said. He described T+0 settlement as a way to eliminate the risk that builds between the transaction and clearance. Every second that you have a difference between the transaction time and the clearance and settlement is a risk that the investor and both parties bear, he told the crowd. Now let's be precise about what T+0 means in practice, because this is not an abstract aspiration. It is a description of what Ripple's XRP Ledger already does. The U.S. financial system currently settles most equity trades at T+1, one business day after the transaction. U.S. Treasury bonds settle at T+1. Cross-border payments on SWIFT can take 2 to 5 days. The risk embedded in that gap, counterparty risk, settlement failure risk, liquidity mismatch risk, is what Atkins is describing as an unnecessary cost that blockchain technology eliminates. The XRP Ledger settles in 3 to 5 seconds. It processes 1,500 transactions per second with mere zero fees. It has been operational since 2012 without a single successful attack on its consensus mechanism. The SEC and CFTC jointly released token taxonomy guidance at the DC Blockchain Summit in April 2026, listing tokens the SEC considers digital commodities, including XRP, Bitcoin, Ethereum, Solana, and others. The release has since drawn price premiums in Asian markets. Atkins said the guidance is principles-based and not meant as a fixed list. By shifting core infrastructure onto blockchain rails, financial activity can become faster, more auditable, and more resistant to systemic failures. Tokenization is expected to play a central role. By representing traditional assets such as equities, bonds, commodities, and real estate as blockchain tokens, markets can unlock 24/7 trading, instant settlement, fractional ownership, global liquidity access, and automated compliance. The SEC chair is describing a future financial system. The XRP Ledger is a present operational reality that already delivers what he is describing. The gap between those two statements is the market opportunity. Now, before you get too excited, and I say this because the next number is genuinely significant, but it requires context, there is one critical variable that determines whether the KBank deal and the Atkins testimony translate into actual XRP demand. It is the same variable we have tracked for months. And this week, it moved. Not perfectly, but it moved. Here is the mechanics of the XRP demand equation, stated as precisely as the data allows. Ripple's on-demand liquidity product uses XRP as a bridge asset. A bank in South Korea sends Korean won into the ODL corridor. The system converts it into XRP in milliseconds, transfers the XRP across Ripple's network, and converts it into UAE dirham on the other side. The transaction settles in seconds. The XRP position is held for milliseconds. The price volatility risk is neutralized by the speed of the bridge. This is the product. It works. It has been demonstrated. The question is why it is not the default in every Ripple partnership right now. The answer is compliance architecture. A bank's internal risk committee cannot approve an XRP bridge settlement model if the regulatory status of XRP can be reversed by a future administration without congressional action. Not because the technology fails, because the compliance model fails. Senator Lummis expects a full Senate vote on the Digital Asset Market Clarity Act by June 2026, which Atkins called the only way to future-proof policy gains. That statement from the SEC Chair is the most direct confirmation yet that even the joint SEC-CFTC interpretive release, which named XRP as a digital commodity on March 17, 2026, is not considered sufficient by the regulatory establishment itself. Atkins called the Clarity Act the only way to future-proof policy gains, not the guidance, not the taxonomy, the statute. The KBank deal comes as South Korea finalizes its Digital Asset Basic Act, prompting major financial institutions like KBank to build blockchain and stablecoin infrastructure ahead of new rules on custody, tokenized assets, and cross-border activity. Two countries, two regulatory frameworks being finalized simultaneously, and both of them are building their digital financial infrastructure on Ripple rails before the laws are passed. Because institutions build to where the regulation is going, not where it currently is. The Clarity Act is where United States regulation is going. The question is, how many Ripple partnerships flip from RLUSD settlement to XRP bridging once it passes? And that brings us to the part most channels won't talk about, because it doesn't fit the simple bullish narrative. The specific mechanism by which all of these Ripple deals, Deutsche Bank, KBank, Kyobo Life, Convera, could activate XRP demand simultaneously when the statute passes, and what David Schwartz, Ripple's CTO, has said about the technical design that makes that activation possible without each bank requiring a separate integration. Ripple co-founder and CTO David Schwartz has been the most technically precise voice in describing what makes the XRP ledger structurally different from every other blockchain competing for institutional payment infrastructure. His consistent public position: the XRP ledger was designed from the beginning not for retail speculation, but for institutional settlement. The design choices: the consensus mechanism that does not require energy-intensive mining, the 3 to 5 second finality, the native decentralized exchange built into the ledger itself, the automated market maker that launched in 2024, all reflect a deliberate architecture for institutional-grade financial operations. The native DEX built into the XRPL is the component that makes simultaneous activation possible. When a bank like KBank activates ODL, it does not need to build a custom bridge. The ledger's native exchange handles the conversion between Korean won-backed assets and XRP and back again. The infrastructure for that conversion is already live on the ledger. Ripple predicted the tokenization market could reach $19 trillion by 2033. Tokenized fixed income stands at under $9 billion compared to more than $145 trillion in total market value. Even in the most advanced category, private credit, tokenization remains below 1% of total value. That data point, tokenization at less than 1% of total market value, is not a discouragement. It is the scale of what is being built toward. The XRPL is already live with tokenized real-world assets. Ripple custody is emerging as a foundational layer for digital asset adoption beyond payments. expanding institutional reach through custody and infrastructure services. The architecture is in place. The partnerships are being signed. The regulatory framework that activates XRP as the bridge asset inside all of them is the remaining variable. If you have been tracking this space long enough to know the difference between a Ripple press release and a structural development, you already understand why the KBank deal matters more than the price action this week suggests. The institutions building on these rails are not doing technical pilots for the sake of headlines. They are building infrastructure positions ahead of a regulatory event they are confident is coming. They build before the law. Retail waits for the confirmation. This channel exists to close that gap for the people watching it. Subscribe now and turn on notifications. Because when the Clarity Act markup date lands, when the first Ripple partnership flips from RLUSD to ODL, or when the next institutional disclosure confirms the pattern we have been tracking, that analysis will be live here within hours. Not days, hours. The structural picture is already visible. You just have to know where to look. Let me leave you with the 3 specific signals that will tell you whether the KBank deal represents the beginning of an ODL activation wave or another step in the RLUSD first, XRP later pattern. Signal 1, the KBank Phase 3 announcement. If KBank eventually turns on Ripple's on-demand liquidity service, where XRP is the bridge between Korean won and dirham or baht, every transaction would create real XRP buying and selling activity. Watch the KBank press releases for any mention of on-demand liquidity, ODL, or XRP as a settlement asset. Phase 2 is RLUSD. Phase 3 is the switch. When they announce it, that is the XRP demand signal from this partnership. Signal 2, the Clarity Act markup date. Senator Lummis expects a full Senate vote on the Digital Asset Market Clarity Act by June 2026. The markup must come before the floor vote. Chairman Tim Scott has given no date. The moment a markup date appears on the Senate Banking Committee calendar, not a statement about progress, a date. The ODL activation timeline across all active Ripple partnerships compresses immediately. Signal 3, David Schwartz on partnership integration timelines. Watch for any public statement from Ripple's CTO about how existing partnerships are structured relative to regulatory milestones. Schwartz is the most technically precise public voice at Ripple, and when he speaks to integration timelines, he is describing the actual engineering roadmap, not the marketing narrative. These 3 signals, tracked together, tell you when the switch flips. Drop one word below. Switch if the ODL activation thesis landed as the primary signal. Statute if the Clarity Act is still your primary variable. Both are right. They are the same event. XRP News Flow Signals, data, not noise. Structure, not hype. See you in the next one. Not financial advice. Always conduct your own research.